Okay, here we are. NIO is trading under $20 a share. It was a horrible week or months, if you will, no doubt about this. So let's talk about what's going on, my views about it, and also revisit Baillie Gifford's famous prospectus and price target of $300 a share. So here we have an interesting tweet. Last time NIO was at this price, they were delivering under 4,000 cars per year, just avoided bankruptcy. Now they have 7 billion in cash and will deliver around 180,000 cars and approximately 10 billion revenue at a time where the oil prices will make EVs even more in demand. The stock price is nonsense. So of course there are lots of things going on, and most notably, unfortunately, a war in the Ukraine, and I think this is maybe a time where we should pay more respect actually to the humanitarian crisis around this and not so much how this implicates share prices. But if we look at the macro picture, we can see that interestingly people are fleeing into bonds, perceived safe havens. So the yield has been dropping on Friday more than 6%, meaning that people are buying bonds. And so it seems that markets are currently anticipating or pricing in something like a stagflation, so the GDP coming down, the economy doing less well, possibly going into recession, at the same time having a higher inflation. And it doesn't help that people like Cathie Wood been calling inflation to come down because of the deflationary forces of technology, and that really didn't happen, right? And this is a couple of months now this is going that way, and now with the Ukraine war going on and oil spiking, certainly this is not going to happen in a very short term, although I would still also agree that over the time possibly those supply chain issues will resolve, and also I agree that technology forces are in fact deflationary. However, that's just been the wrong call, and that's really bad on growth stocks and technology stocks in general. And so particularly stocks that are not profitable yet have been beaten down along each other, most of them down 50 to 80%. NIO is no exception with that. Now, if you think from a money manager's perspective or just your own investment, if you had 100k to deploy right now and invest somewhere, would you do the same as the markets are currently doing and actually buying bonds that yielding 1.7% for the 10-year? And that's sort of your expectation that you're having on the yield that you want to generate? Or wouldn't that actually be the time right now where you actually want to risk a little bit more, meaning buying risky growth assets that have now come down significantly actually, which in effect may actually yield much higher? And a couple of examples to talk about here. So first of all, I would say like companies that are really showing right now that they're growing, that they're producing cash flow, that they are profitable, like for example Tesla. I think they will be doing quite well even in such a bad market sentiment, although they also are feeling the pressure, and Tesla had quite a bit of volatility in the last couple of weeks as well. However, as long as they are showing these kind of fundamentals, I would say that investors have kind of a clarity about what this stock is going to do, and therefore people will keep investing in it because it is kind of a more certain, while not risk-free, but still lesser risk investment than, for example, investing in NIO right now. On the other hand, NIO right now is trading at, let's say, roughly a 30 billion valuation. And the tweet that I've just shown, the author is also saying like, they'd be doing around 10 billion US dollars in revenues this year as well. And I would agree with that, and I would say this is also my expectation. And if that would come true, then NIO is currently priced at a price to sales of 3x, which is really not a lot for a company that would be growing 100% year over year. And so the multiple for NIO has come down significantly already, and we can say that if the fundamentals turn out to be in favor of NIO here, then most certainly the investors should be able to also look on a longer time frame of this company again, because this is exactly what they have done in the past. So saying that NIO has those growth expectations and it can grow into that, but now as the uncertainty is getting higher and higher. In that time, investors are fleeing into more perceived less risky investments. But at this point, I think this risk assessment somewhere is going to change again, because right now NIO as a $30 billion company, well, one could assume that in 5 to 10 years time they might be selling 1 million to 3 million cars a year, so similar to a BMW, and such companies are valued between 50 to 60 billion US dollars usually, so that's at least 100% upside. So if you think that NIO can achieve such kind of a volume, which isn't as high as a Toyota, as a Volkswagen, or possibly what Tesla might do in the future, then that might be still a pretty safe bet and would actually yield much higher than investing in bonds right now, right? So, and I think investors at some point will recognize that maybe today with the ET7 launches, what I think is showing how impressive this car is. And of course there will be questions like how many people can afford it, how big is the total addressable market of this car. On the other hand, it really shows the quality of the product, and I personally think that this will be selling very nicely, and actually just in the next couple of months we will see how NIO will also address their weak points in terms of that they have older hardware currently that they're selling, and they will come with the upgraded ES7, they will have the ET5, therefore also expanding the total addressable market dramatically, because it will also come down to a lower average sales price of that particular model, and thereby it is actually growing into this valuation quite nicely, I would say. And that would leave NIO actually as an investment that is having perceived less and less downside risk, because of course it's been sold off so much, but naturally with those growth implications and even a very high up to 10x and more opportunity in case that NIO is actually able to pull off their additional revenue streams in the area of e-commerce, in the area of self-driving. So NIO is about to launch their NIO autonomous driving subscription also by the end of this year or beginning of next year, with a software upgrade that will be delivered onto these cars with this new autonomy hardware that's now coming out with the ET7 and the ET5. And so these additional revenues that are subscription based, that have high margins, that are more software-like, that will be additional growth drivers for NIO and ultimately also its valuation. And so ultimately, let's go back to the Baillie Gifford prospectus, which has been actually given by 2015, and they are usually looking 5 to 10 years out. They are investors that are looking to invest in decades, and if we look at this, I think it is still fairly accurate actually in which situation we are. And well, they say that over 10 years, so that would be in their case till 2025, they could be selling 1 million premium vehicles a year, and so that would result in RMB 400 billion in revenues. And then NIO Life with clothing, clubhouses, entertainment and other revenues would actually also come to another 200 billion plus per year. And high margins that are 2 times the traditional premium vehicles, which we already see manifesting. So NIO already has this 20% vehicle margin, and they said with the ET7 they will actually reach 25%. And so this is how Baillie Gifford is actually arriving at a 300 billion valuation for NIO. And what I like here about this prospectus is also that they outline where they might be wrong. So for example, local competition like XPeng and Byton might have deep pockets and similar Me Too offerings. And while Byton is already bankrupt, XPeng has been quite successful in the market, but I think it's not a challenger or competitor in NIO in this regard, because they are simply not in the same segment there. For the proposition of the user enterprise, where we have stuff like the NIO Life, I think this is still a big question mark. We need to see like how they can actually scale the NIO Life offerings in terms of e-commerce and stuff like that. So, well, always remember, this is a startup, and so it's volatile, there are lots of unknowns, and so it's rightful to point these things out where they could be wrong. And on the manufacturing side, here is a question mark around JAC as a partner, that they may not be able to scale up as much as they need for meeting the demand. And so NIO would necessarily have to invest more on their own. And I think this is also a fair point where I think most of current question marks are around, because of course NIO has not been very successful at scaling as quickly as many investors have thought in the quite recent period. And I think this is where most of the sentiment is currently lagging. And on the other hand, we have now NIO Park going up. We have now the second shift kicking in for the ET7. So it's quite early still to tell whether or not NIO can actually succeed at scaling their manufacturing here. Then what I also really like is, what doesn't the market understand about NIO? Lazy analogies to Tesla. Exactly. Far too many videos out there about NIO as the next Tesla. I certainly disagree. The visions are very different. And it's good to see that Baillie Gifford is actually agreeing on that as well. And then many people are too fearful about the short-term capital needs. I'm always saying like that NIO is more like a internet platform business. This is where Li Bin, the CEO, is coming from. It's more like an Amazon kind of business case where you reinvest lots of capital in terms of growing as much as you can and also developing the business as much as you can. And so there will be capital needs. On the other hand, we've just seen with the Hong Kong IPO that they even didn't raise further capital. And so, well, one could see that the profitability for NIO is at the horizon. However, lots of uncertainties also again about R&D and the NIO houses and the swapping and so on, how much this will actually cost. Then of course there are more question marks around the macroeconomics, like for example the delisting issue, but now NIO has solved this somehow, because they're going to Hong Kong with a secondary buy introduction. And while people may argue that, well, you want to be listed in the US because that's where most investors are and there's more liquidity and US investors are paying higher prices for it, I would actually start and questioning this, because actually what we've seen recently with some companies going back to Hong Kong, going back to mainland China, they have suddenly 2x, 4x the valuation than they are having in the US. And so, well, that could ultimately even be a good move. However, I would still prefer the outcome that Chinese companies can stay listed in the US and also have a secondary in Hong Kong, in Singapore or elsewhere. I think NIO will also go to the mainland stock exchange, the China Star Market, and ultimately having this larger investment base, and possibly with the investors in Asia contributing to the fact that they are seeing live what's happening, they know the product, they know the company, and thereby have a higher conviction and possibly can balance the short selling mechanisms that are happening on the US exchanges. And so ultimately, coming back to the question, if you would have to deploy 100K, well, I wouldn't possibly YOLO all of it in NIO right now, because it's a volatile stock, as we've seen. However, at some point there will be a bottom, and as I've mentioned, like even with conservative growth estimations or what this company could achieve, then I would say it's at least a 50 to 60 billion US dollar company at some point in time, and that's an easy 100% upside. And then I still think that this valuation outlined by Baillie Gifford is in play, and it could certainly achieve that, or maybe even more, depending on how well everything is playing out. I don't think that's off the table. I don't think Baillie Gifford is wrong. It's just not the best time to invest in growth stocks right now, that's for sure. And so, well, one would rather want to average in and not spend everything just in one batch of investing, I would say. On the other hand, investing in such a growth company is of course very risky, much more risky than buying US government bonds. And so this risk needs to be balanced. It's not for everyone, and there are different opportunities out there to invest in. I mentioned Tesla, which I think carried by the S&P 500 and as an American company is possibly doing much better in the short term right now, until there will be a bottom in growth and technology stocks. And then there are other opportunities there as well. But wouldn't investors also want a risky asset in their portfolios where they can achieve such kind of growth? And actually, with NIO not looking too bad on the fundamentals in terms of achieving profitability soon, having a really good product portfolio, and also lots of these prospects and uniqueness, I would say that is certainly the case, but that's just my opinion. And so, well, I could be wrong on that. Let me know what you think personally about this in the comment section, and then hope you enjoyed this video and see you in the next one.